Mm-mm-mm. Mm-mm-mm. Oh, sorry guys, Uncle Charters just got done watching The Wolf on Wall Street. Anyways, guys, look at this chart, guys. Dips are still being bought here. And yeah, we got a green candle on the daily chart. Still, still riding up this rising channel here, guys, okay? I said in previous video, Uncle Charters will become bearish when we finally break down the pattern of this rising channel, okay? Now, the breakdown levels at 410.25. That's also the 78.6 fib level that I got here. So we got a level of confluence, okay? Very critical level. And as I said in previous video, I'm going to say this again. Uncle Charters is bullish as long as this pattern holds, okay? So as long as above 410.25 and 412, okay? That's the two patterns I'm watching. We got a third close above 412 again. All right, so bears are not showing follow through here. But like I said, if we can break down 412 and 410.2 tomorrow, that is when I would turn bearish. That's when I would look to short as of right now. Breakdowns of support 412 and 410.25 must break down. So if you're bearish, please do not try to call a top. The market makers can look to screw us over and keep melting this up for no reason at all. They can do that. You know, a lot of time the market, when it goes up, it likes to climb walls of worries, especially when majority of retail traders are bearish. They want to screw us over. You guys know this. So please follow the price action and wait for the breakdown of 412 and 410.25. Now, we did get some intraday breakouts. So when I'm saying breakdowns, I'm looking at the daily chart. So we need closes below 412 as a warning to bulls on the daily chart. And we especially, if you're a bear, especially need a breakdown of this 410.25 level. Okay, to break down this rising channel on the daily chart. The higher the time frame, the better, okay? But overall, dips are still being bought. We go to the 15-minute chart here. All right, I had the 412 level. That's the purple line right here. Morning was pretty choppy. We chopped. But then finally around 11:30, we finally got that breakdown of 412, which triggered puts. But unfortunately, it didn't show much follow through. Okay, we went as low as around 411. All right, if we go to daily chart, that's about where the 5 daily moving average is. Okay, the 5 daily moving average is creeping up, but this morning it was around 411, which is around where the SPY was bouncing. Okay, now the bearish intraday setup did not work that well. I mean, if you scalped it, sure, it worked well for a 80-cent $1 move, but the awesome move is the false breakdown setup. If you're a bull bias trader, you guys want the false breakdown setup to be your number one entry of choice, in my opinion. Okay, especially when Uncle Charters is telling you when I'm bull bias or when I'm bear bias. So like I say, I'm bull bias above 410.25. Definitely watch out for these false breakdown setup, especially when we're above, the support level that I'm watching. Okay. And it goes the same way for the other way around for bears. If you're a bear bias trader, the false breakout should be your number one trade setup, okay? In this case, we had a false breakout. It happened pretty fast. So even if you didn't catch it right around 412, you could have caught it as it went up, followed the momentum. And boy, oh boy, that false breakdown setup led to a very nice move to the upside at the end of the day. So this is what I mean by dips are still being bought, like getting moves like these. All right, not much follow through to the downside, but I do want to mention, guys, since mid-March, we had a one-directional move. Since mid-March, we had a one-directional move, and pretty much, first half of April, we had it's pretty choppy, okay? Pretty choppy. And you know, we know the market phases between the trend phase and the chop phase. So after a choppy first half of April, I'm waiting to see, and I would love to know if that will lead anywhere to another trend move, whether to the upside or to the downside. So here we are heading into the second half of April, and what we are seeing now is SPY closing above critical levels and dips being bought. But like I said, we gotta see follow through. Playing defense is not enough. All right, we can test support all we want, but if there's no clear follow through, meaning clearing, resisting, and pushing a high level, it's not very bullish. Okay, because the more support get tested, the more the buy orders get absorbed, and when the buy orders get absorbed, that's usually when the breakdown of the support happens. Okay, so as a bull, you guys don't really want to see 412 and 410.2ish get tested that much more. And once 413.5 is cleared, then maybe we can go test 415, previous pivot high. All right, previous pivot high from last Friday. And we had some strong selling pressure there, but if bulls can clear 415, I'd be more confident and more upside to 417 and back in February high of 418.3. Okay, and the top of the rising channel is now at 422.7ish. Okay, keep in mind we have a gap fill around 422, so maybe the market is still trying to work its way up to fill that gap. All right, all that bullish sentiment will be canceled once we break down these patterns, these structures, whatever you want to refer it to. But the levels that'll indicate to us that these patterns are broken down is 412, breakdown of 412, and breakdown of 410.25. Look to short when support fail. Look to long when resistant clears. False breakouts should be your best friend if you're a bear. False breakdown should be your best friend if you're a bull. And if you're a sheep, you love every single one of the trade setup because they make you money regardless. Okay, bah. Now let's move on to the triple Q. Okay, we see the triple Q here. We had an inside day candle, hammer candle, but it's an inside day candle because it was in the range of the previous day candle. All right, so it's important we look at the previous day's range. The high is at 320.3 with the low at 315.6. If you guys know about this trade setup, you want to see the break of this range. All right, so obviously above 320.3, I have resistance at 321. That's when you want to look to long, okay? Gap fill around 323 with 326.5 above, all right? And if you're bearish playing this trade setup, you want to see 315.6 fail as support. I do got support of my own around 315.3, but when support fail, look to short. You look to short, and the next target will be 313.2ish. with 311 and gap fill at 308 below that. Okay, so right now markets overall for triple Q, it is chopping because that's usually what an inside day candle means. All right, it is chopping green day, but it's overall on the bigger time frame still chopping. All right, so watch those support. Immediate support is at 317.5. If that fails, then we can go test at 315.6 is support again with 313 below that. All right, and as far as immediate resistance, we have it at 319 clear. If we can clear that, then now put 321 and above 321 would be bullish. Okay, consolidation over above 321. Now here's IWM. All right, you see there's also chopping. We got a bunch of sideways side-by-side candles, but overall though it's still above that 176.5 level. All right, we just need to see it clear 179. It's currently at 179 in the aftermarket, but it counts more during trading hours, as you guys know. So if we can clear 179, that will put 181 in play. Above 181 would clear this green trend line that I have here and recapture this purple trend line. So above 181 would be pretty bullish for IWM. Okay, let's see. Tesla is bear flagging here. Bear flagging, guys. All right, breakdown of the bear flag is 184.5. If 184.5 fail, you guys know what to do. Look to short with 182, 180, 178, and 176 back in play. Let's keep it that simple. 184.5 fail, look to short. Okay, we could base more, we could chop more, or we could go up a little higher. Okay, but 184.5 breakdown of that support is when you want to short for Tesla. Okay, resistant It's around 187 now, so it is resistant at 189 and 190.3. Okay, we almost tested that today. Almost. But bulls will need to clear that 190.3 to trigger more upside, put in the 50 daily moving average at 192.6 in play. And if it could clear the 50 daily moving average, that would be pretty bullish. 194.5 would be in play first with 197-ish above, all right? Apple is still basing at that yearly trend line, guys. Overall, that's not bearish. Okay, if it was bearish, you want to see strong buying pressure, selling pressure, red candles, breakdowns of support. You guys know the deal. That's not what we're getting with Apple right now, despite it testing a critical resistant level. Okay, so above 165.3 would be bullish. That'll put Apple back above the yearly trend line and put 167 and 170-ish back in play. Okay, remember this purple trend line all year in 2023. Apple has been riding this purple trend line to the upsides, okay? So I cannot get bearish until we break down this purple trend line. Now, there is support at 163.5 and 162, okay? You can short if those support fails, but know that it's a bit risky because you're shorting on an uptrend, okay? But if we can break down this trend line right here, break down this trend line, this will need a breakdown of 160.5. Break down 160.5, that's the best time, in my opinion, to get bearish because we're breaking down this trend line. That will be in breakdown mode, and it will put the gap fill at 158 and 156.2-ish in play first, all right? Let's take a look at some inverses. Now, DXY giving us a bounce here, double bottom from February 2nd low, April 13th and April 14th low, got some bounces. Bulls defended. However, right now we're running right into that yellow trend line, a downtrend line, okay? So if it wants to break out, it needs to get above 102.1 and recapture 102.4 to put 103 back in play, okay? It's very possible that we reject from here, okay? Support is at 101.8, all right? Trust the rejection when we break down the support. So if DXY drops back below 101.8, that will be bearish, and that will put 100.8 back in play, which is weaker now as support, okay? Here's the VIX. After breaking down that, that chop range that we had since late March, it showed follow through. It tested the 17 support level last Friday. Today is breaking down that 17 support level. Lower Bollinger Bands around 16. I got next support at 15.7 for what it's worth, okay? So I can't get bullish on the VIX unless it recaptures a level. So false breakdown setup, we would need a recapture of 17 to put 18.5 back in play, okay? As long as below 17, guys, VIX is bearish and we still have more downside incoming. All right, now here is the dark pool orders. Dark pool, we had 2.9 billion in premium at the 412.5 level. Remember, they are both buy and sell orders because in order to buy, someone has to sell. In order to sell, someone has to buy. What's most important to us is that we know, based on what Cheddar Flow is showing us, is that there is activity at that level. There's activity at the 412.55 level that the institution were doing, okay? So we add that level to one of our support and resistant levels, and we keep that level in mind. If it's the price is up, above if SPY's price is above that level, that's bullish to me, and if SPY's levels below that level, that's bearish to me. Does it make sense? Okay, so we know there's activity at that level, so that 412.55 level is a level to put in your charts based on the dark pools, okay? Now here we go to the option flow. SPY, I'll filter for 500K premiums or above. 97% into puts. Okay, now let's take a look at these puts though. Here's a block order. 11.5 million in premium, 700 strike price for December 20th, 2024. Very far out, guys, and very, very in the money. Seeing more block orders. 465 strike price, very in the money puts. More block orders, 435 strike price. So this is the type of orders that I mentioned to you guys last week when we start to see these type of block orders and split orders, very in the money orders, it's a sign that, you know, market makers, not market makers, the whoever is putting these money in, hedge funds, whatever, they could be hedging. But one thing I noticed with the price action, when we see these type of orders or more of them start to pile up, is that SPY and triple Q and stuff like that, they come in with a lot of volatilities, with big moves, either to the downside or to the upside. Now, as a day trader, that makes me very excited. Okay, I don't know if it's gonna go up or down, but that makes me very excited, and I hope that I'm right so we can get some tradable moves. Okay, so this is a sign of incoming volatility, especially with the dark pool orders coming in over almost 3 billion. You know, there's liquidity in the market that's moving around. 90% in calls for triple Q. Nothing that really stick out though. All right, nothing that really sticks out. Even this block order right here, 1.4 million in premium, 240 strike price, very in the money calls. Okay, so we'll see if more and more of these will start popping up more in the coming days. 76% in the puts, and here comes, look at these block orders. Yeah, very in the money puts, very in the money puts. They're starting to pile up more. So guys, let's take this as an educational thing. All right. Let's test this theory out. We seeing these orders come in. Let's see what happens in the coming days, if this is actually a sign of increased volatility. Okay, Apple, 100% in puts. Okay, 167.5 strike price, so it's kind of in the money. 3.4 million, over 8,000 size. That's pretty bearish. 90% in the puts for Tesla, also getting those really in the money puts coming in, block orders for them as well. And here is the VIX, 66% into calls, 34% in the puts. All right, thank you guys so much for watching. Hope you guys found value in this video. If you guys want more content from Uncle Charles, please consider joining my Discord. I would love to serve you guys at a higher level. Other than that, have a great evening. Peace.